Good evening, good evening. Welcome to the live Facebook for the evening, Wednesday night. This is your host here and also speaker Martin Wong. And coming from the 4th of September, something I'd like to share with you and also with our members who were generally quite interested what's actually happening to the market. And that's what tonight we will explore on the Bursa Finance and why I think it's also poised for a bullish surge. So we'll be looking some of the key factors that is going to be driving this market in here. Again, as usual, our Wednesday night, we do welcome some of your comment or feedback that you see on the Facebook in here or on the later on will be on YouTube, and we will try to answer in it. But tonight we have a lot of things to pack for, so I'm just going to get started in here. All right, I'm going to be sharing you some what are things I've been seeing and how I feel this market has a little bit more room to go or go sideways. Okay, so let's take a look at it. So tonight we will be talking about Bursa Finance. Why is it higher and how high can it go? And why is the finance sector going up? All right. We'll also be looking at the VSA sign of strength and how to tell if the finance sector will keep rising or fall from here onward. And also the recent impact of the big brother, right? The US finance sector too. How does it impact in here? We'll be looking some of the top finance sector in US market and also the expert opinion for the month of September 2024, which we already see initially after the Jackson Hole meeting that the US Federal Reserve Jerome Powell and has a meeting minutes that is a bit more bullish, either going towards the interest rate cut. Now, what is really happening right now? We saw the sell-off that we have on after the Labor Day long weekend, and tonight it does look like the trend is up. So we will dig into all this points and factors that we go on in here. And if you like what you seen so far in here, do give us a thumbs up and like in our Facebook. So let's get on to it. And a public announcement for those of you who are looking for a course. We are doing one which is credited with the CPE, which is partly part of the SIDC. So this will be 10 points coming this October for a very low price of 98 ringgit, which is actually on the 8th of October. It's 8:45 to 4 p.m. and it will be done by Zoom. Okay, it will be on Zoom in here, and that's why we will bring this in here. Things that I've been always talking about, the volume spread analysis with fundamental aspect of it in here. There's a QR code on top in here if you wish to register for the early bird. So what is the emotion now? Now last week I remember I flashed this. A lot of people were having either greed as the market go on and the fear of missing out when they were about to get into the market, fear of missing out. And then all of a sudden the market started to turn up when we were quite sure that the interest rate is likely to be cut as for the month of maybe mid-September or end September, when after the US Federal Reserve has sort of given its summary. But then there's a big change, right? With Nvidia coming out with a better report that we saw last week with earning expectation, but the guidance ahead seems to be low. Now that has turned the market into a lot of uncertainty, right? We have seen also the previous global sell-off that we have, which happened on the 5th of August, which is about a month ago, and the market since back has climbed back up after only 2 weeks. But of course, any market that goes up has to come back down, a little bit of pullback, which is expected. And I always say that earlier about 2 live Facebook ago, the market will have another correction going into either September and October. And if you may know, September month seasonality for the last 8 years, especially in the Malaysian context, Bursa has always been a bearish month, and that also goes for the US market. So with no surprises, after the Labor weekend, the market was closed, and then Tuesday, yesterday, the US market reopened, and then we have the sell-off, pretty much as predicted. But we also want to look at one of the expert fund manager likely to say for the month of September. So let's get on to the market in here. Now, of course, the market, very important. We always need to look at the facts. All things being said with you, just updated there, we must also look in the facts. And one of the things that we always do is to draw our market stages. So this is the market stages. So when we draw this, we always want to look at the facts, okay? By looking at this, then we will stay within our so-called conformity in here, that we don't go sidetrack of our trading strategy. Now remember, 2 weeks ago, one of the video I talked about re-evaluating your trading strategy. Do you have some sort of trading? Do you follow the market stages? Do you follow the green pentagon? And this is something that we really want to unpack all of this here. So right here you can see this is definitely a stage 1, what we call stage 1 accumulation. Okay, keep this in mind because we're going to come back to this again. Then we have the stage 2. Okay, this will be the markup. So after the market has gone through a accumulation stage, you start to mark up, and this will be maybe I'm just going to move stage 3. This will be the distribution, right? And then I cannot emphasize time and time again, I always refer back to this so-called compass of the market. It sort of tell me what is likely to be happening, and this will give me the guide why I am. So you look at this in here, and we want to be very, very systematic looking. So take a picture of this one, and then I'm going to show you what I mean. So if you look into the market, then this is what we usually have. So we have the stage 1, stage 2, and for our members on yesterday, I think I talked about those change of volume within the market stages, right? The change of volume. Good evening, Nora, thanks for coming. When there's a change of the volume which happened in the stage 1, that's where we get the market going. Now remember, now I'm going to ask the audience here, those of you who's paying attention, where is our KLCI market now, right? Where would it be? Is it in stage 2? Is it in stage 3? Is it in stage 4? Or maybe in stage 1? Let's take a look at it. And of course, all the sites and all the material that we cover in here partly follow the principle of the Pentagon Guider system, where we use volume spread analysis. And of course, Pentagon Guider is a signaling indicator that tells you when the stocks has upside and also downside indication in here. All right. So before we go into the KLCI, we want to look into the fear index. Unfortunately, Malaysia don't have a fear index, which is a measure of VIX in here. But I want to bring your attention in here why the volatility. Right now, as we spoke on, I think the US market is opening soon, or open at 9:30 in here, because they haven't got a daylight change yet. And you would see usually when the market hit a certain threshold level, we are talking about the 30 level, then we see a little bit of a market turning. We haven't seen that yet because one of the indicators used that when the VX is low, when the market corrects, that's when you want to be coming up to buy right now. So if you look at the market right now, just before we start this video, this time a recording in here, you could see the VIX has jumped up to 22.9, all right, 22.9, and usually at the 30, and now it's only 22, so banyak jalan lagi, there's another 10%, all right, then we'll see some sort of stabilization in the market or pullback, so which also means tonight the US likely to sell down, okay, US market will sell down tonight, more than anything else, so you'll probably form a double bottom, okay, so we have to wait. Remember, month of September, as I said before, in the beginning of this talk, is going to be a bearish, and the VIX, which is a fear indicator, are already showing you that this market has more room to go down in here. All right. So let's bring ourselves back to the local finance news, which we saw what has moved so far. Now, this has have always been driven by the major banks, and of course, the major banks, one of Malaysia is Maybank, right? Maybank has done pretty well in here. So you can see the results after coming up and after a nice move since the beginning of August, which I'm going to show you on the chart here. So what the Maybank has done has really distanced themselves away from the second and mid-tier banks. So they have done pretty well. They've done their margin back. Of course, you've seen many of Maybank commercials either on YouTube, it's on TV or on your mobile handphone, and they go out and differentiate themselves in terms of the commercial loans as well as growing their CASA, which is the current account, saving accounts. They're also trying to grow that too and increasing their market share. So the result has been great, but also we need to match these earnings, quarterly earnings back into the charts. I'm going to show you how we do that. So I want to draw your attention in the right at the middle here, where they talk about this here. They're able to grow their current account, saving account of 10%, which is very close to very good, you know, assuming the population growth of Malaysia is only around the 3 to 4%. They are able to grow the 10%. So this is quite impressive, and such that their revenues are doing better, their earnings are better, and that's why you see Maybank being the major bank really push up, and that gives the reason why we have these finance stocks moving up nicely in here. Thank you, Andy. Thank you for coming. So this is what we are looking at, and of course there are certainly secondary news that's behind this, and which been driving. If you look at the yearly, right? If you look back, the finance stock has always been a mediocre performance. 2020 was 6%, 2023 was minus 1% in here, and their best months you could see have been always the month of July, right? August so, but August been great, and that is because taking a cue from the US finance sector, which I'm going to share with you in here. But do take note, and this is what I think one of our Kak Nora who is listening in here do agree, which I already been sounding. The month of September is always been very negative, very bearish month. So another bear month, but coming to October will be the interesting run for the year. October, November and December, this will be this nice run that we push it through. So right now you could see the finance sector year-to-date return is about 19%, one of the best performance. The last time we had this, okay, was 2017, okay, 2017, which is the year partly of the infrastructure growth. Now, one of the things that you will also notice, the constructions, the property sectors has done pretty well. All right, that is where we saw MRT3, ECRL, LRT3B projected. So this is already been priced into that finance, because a lot of the construction in here needs a lot of financing as more housing being developed along the line of the data center, which previously I've talked about in here. So those are considered as growth. So when growth comes in, definitely loans, financing, commercial banks will need to lend out to grow this kind of infrastructure, and that's why we see the finance. Now, moving on to something which is very personal to me, which I've always been liking, is the tech sectors. Now, tech sectors has done pretty well in 2019, 2020, 21, but 2022 we saw the big drop, almost of 39% for the tech sectors. Okay, so those of you who are our VSA 360, go up to the seasonality chart and type technology and type finance. You will see this chart updated year in year. So right now we saw a very good let me just delete this, a very good early part of the year up to June. The first 6 months of the year was pretty decent, the kind of return that we've seen. But for the month of August, which we saw the global sell-off on August 5th, right? August 5th, where the expectation that the technology stock has overrun and the inflation continued to be high. But of course, 2 weeks ago, we saw the US Federal Reserve, Jerome Powell came in and said that likely to cut interest rate, and that's why we saw the thing going. But right now, with the market turning into negative territory, when we saw this sell-off in here, talks about recession is coming back. It's always like that one. Whenever the market fall, recession talk. When the market go higher, no recession talk. Okay, so it's the tempo of the market that drive the news, not the other way around. Not news drive the market. Okay, so keep in mind it's the tempo of the news, and one of the tempo of the news is actually looking at the VIX indicator, which I've just shared with you, the VIX fear indicator, which is showing around 22, 29, but it is yet to go higher to around 30 plus before the market started to turn. So you can see from here, Bursa is only returning back 2% after a 14% drop in the month of August, right? Which is one of the worst drop in here. And I think September month may also drop a bit more, but you can see finance stock will drop, but then we will see the technology stock recover back. Okay, so let me repeat this again, because the seasonality, if you look back, okay, let me just close this. So if you look back, September finance drop, okay, but for September technology this month will go up, because why? You'll see this 14% drop a lot. So that's why it's important to use the VSA 360 seasonality to drive what you'll be buying in here, right? So on the topic whether finance stock will go up, keep in mind. So keep in mind the seasonality will tell you likely where the market is heading to. So if you look at the Bursa stages, again, pretty much predominated by the finance stock, you can see here, if you draw our market stages, okay, so I'll draw our market stages, you can see it is still pretty much in an uptrend, but we did hit 1600, we had an upthrust. So if the market were to move sideways, and this is what we are looking at, this likely to be sideways going in here. So here we have a V, what we call a V recovery. Okay, let me just label them properly so you can also learn too. So this would be the what we call the stage 2 markup. Okay, the stage 2 markup here. Here can be a stage 3 distribution. Now why I say this is because if finance traditionally in the month of September usually bearish, okay, month of September, and our KLCI is driven by the finance sector, so technology might want to go up, okay, because there's some parts of technology is inside the KLCI, but remember majority, almost 30 to 35% of the KLCI is contributed by the finance sector. In the finance sector were to drop, definitely it will fall into the stage 3 distribution. So this is why we use facts and also use the chart, and then that way we are more comfortable going into the season of the month. So you can see this is stage 3 in here. Now where does it go? Of course, when you follow me every Wednesday on the live talk, I will update you as the market goes on. So we don't worry too far ahead, okay? And we'll just follow what we call the market stages. Now on the small cap stock, let's draw this too. Small cap stock, you could see the market is actually what we have, an auto downtrend. With the VSA 360 indicator, you can see this is an auto downtrend, but the market has sort of arrested, okay? So you can see from here, right, we have a nice so-called distribution, hit the top and then started to come back down here. All right, this was a down. So you can see if you take this global sell-off that we have, it is still pretty much in the downtrend. So right now the downtrend, you have a double bottom here. Okay, let me just label them. So the double bottom will provide some sort of support that the market can go, and who knows, we are still in a sideways market, but it does gives you a good base from where the market is going. So it's very important that the small cap stock need to stay above the 200-day moving average, which is this line that you see here. Okay, so it needs to stay in here. So at best, the market will move sideways. Even better, then it will rebound back there, but not so soon, because the small cap stock, a lot depends on the technology stocks that you've seen in the US, but the technology stocks are not rebounding. So this one likely going to just sort of meet halfway through and cross and move sideways. Okay. Now also let's turn our attention now to the small mid-cap stock. So right, you can see from the mid-cap stock here, right, we'll do the same thing too as we draw the market. Right, so we have a little bit of here, a little bit of this market down. So we have a mini, right, movement here, but overall you can see this is pretty much a downtrend, still a downtrend. And then we have a similar picture, double top. The only difference, this is mid 70s, is trading above the 200-day moving average, because a lot of the bigger stocks, the mid cap stocks, the much done better ones, has stayed above in here. The smaller caps is the one been undergoing through, and this is also partly due to the foreign funds. Now I want to share with you also, let's take a look at this, is the foreign funds contribution. So we will go to our VSA 360 in here, and let me just log in. Right, we can log in here, and we want to look at the, you can see the foreign funds still heavily buying for the last 6 or 7 days. So they've been buying very, very selectively. Let me just move this aside, then you can see it here. So this is why you need a VSA 360 to give you the insights of the market, like what I'm seeing right now in here. All right, let's turn our attention to the US Dow Jones. Now US Dow Jones very similar to the Malaysian part here. So you can see, all right, the market head up. Okay, so we draw the market stages here, but like it or not in here, we have seen now the market hits a resistance. So here with the market falling off, it will fall off too, right? But it picks back up, but it will start to distribute because you have a double bottom. Usually the market will range back down. So you can see where is the support. As I said before, it may tend back to, it hit 41,000. It went up to 41,000. We'll come back and retest back the 40,000, that's for sure. So it will likely to move sideways from here onwards. Okay. Looking at Nasdaq paints a different picture. All right. So you can see Nasdaq has already started to shift down already. Right. You can see from here. So it started to shift down. So it is starting, and you also have the red pentagon. So the red pentagon comes in, so that denotes the market will turn to a markdown, right? It all depends. If the market break back a bit lower from here onwards, then this market will continue to go further down. So we will see how the market is, but keep in mind, now we have a red pentagon. The last red pentagon that it has, it was a real nice pick up here. The market fall, and then pick back up here. Right now it's falling. Trend's not going up. Who knows, if the trend is good, we might see a bit further upside from here onwards. Okay. So let's look at the expert, the expert opinion. Now, one of the expert opinion I've been following is Fundstrat CEO. His name is Tom Lee, and he is always been a major bull fund manager. All right, why is that important? If you think that year, which I am always been a major bull too, he has been right this year many times. I would say 7 out of 10 times. So he's saying that we will see a 7 to 10% correction. Usually 7 to 10% may also mean 12% or so, 12 to 15%. All right. So where are we looking at? Let me just show you what I mean. So if the Nasdaq is here. All right, Nasdaq is where this is already started already, the correction. So let me tell you, Nasdaq already started the correction. Let's switch to NQ. So you can see Apple is already start diving down already. Okay, so we have this. Okay, so take this out. So 15% correction from here. So we start from the high level here. Now already 5%. So turun lagi. Here is 11%. So you can go back to double bottom lah. So 10%, 7%, so somewhere, if 7% will be this one here, the 200-day moving average, which is here lah, 18,800. So usually that's the part. That's why remember this gentleman here, Tom Lee, as much as respect I have, he also uses technical analysis, just like what I've shared with you in here. So a 7 to 8% move, we will see this market moving back to at least 19,000 level in here. So that will form the double bottom, which I already said 2 weeks ago, we will have another correction. Then come October, which Nora said we will give it a love there, all right? October, November, December, that's where we get the bullishness to go. So it's not that difficult to time the markets, as I said early in here, okay? Very well said. So this is where we are, right? To the so if you look at the S&P 500, okay, since we are looking at Nasdaq, let's look at S&P 500 ES1. If you have that in the chart here, so this is pull this here. Make sure you use the info line, okay? The info line here to here is that 8%, 7%, because the market come back up here, ma. So somewhere around here, 5,220. So he did mention on the article, if the market can go above 5,650, which is this level here, right? It means we have a bullishness. The market just ngam stop already, all right? Also, you can see you have a double top here. Double top here, the market have to go down, hit this level, and then break back up like an ascending triangle. Those of you know. So ascending triangle will push for October, November, and December 2024. That's where the rally come. How high and how low, we will see, because in November is another big event, which is the November 6th US presidential election between Trump and Harris, and that has a lot of stakes in the market as we see right now here. Okay, so that's where. So on the focus of the finance sectors, so a lot of the finance sectors behind it is because of the quality of the growth. Now remember 2022, 2023, 2023, 2021, we have the COVID. So a lot of business didn't do so well. So they are coming off from a very low benchmark, a low base, which I'm going to share with you later on the earnings. They were losing money, and right now anything that's positive, just like the healthcare, previously was losing maybe 5 cents per earnings per share. Now it's making 2 cents. That's a lot of growth, and that's why we see this big movement of the market. So a lot of the news that is coming out, a lot of the analysts that is coming up, the margins are definitely holding better for the third quarter of 2024. They did not so-called accommodate less accommodation on non-performing loans that we see in here. So a lot of the loan allowances are less. So that actually makes up for the better windfall in terms of their revenue. Right? Usually during the COVID, they'll allocate more losses in there because, COVID, more people lose their jobs, more companies are out of actions. So that's why they play around with the figures. So also Research House has buy rating for some of these companies in here. And the key thing is there are many other companies that is currently being watched, right? So your job is to watch out if these finance sectors will do well, and one of them you can see here is Bank Islam. Okay, we will look at Bank Islam, RHB here, AMB, and Bank Islam. So these are the other two banks. So we want to look at the chart as well as the earnings after this. Okay. Same news we talk about. Maybank is on track for a solid second half, and that is quite true. Foreign shareholder lenders are definitely looking to growth in here, buying counter. So now, a little bit of backdrop going before why the market changed. And this is what I do think happened, right? After the global sell-off, which I've talked about, which is this point here. Okay, just remove this. This was the global sell-off. Let me just label them so you can understand them better. Global sell-off. Okay, that was a big sell-off, which was the 5th of August 2024. Okay, so after the big global sell-off, you will notice there's a major rotation. So a lot of people are playing cautious. So they already made some money, because coming up to August, so those companies who rotate themselves to the technology, they buy those technology stocks, all right? They buy them technology stocks, so they actually rotate out because the technology stocks are no longer cheaper. They're around the 40 PE, 36 PE, 37 PE. It's kind of easy. Just look into your Inari and you will find out. Then you go over and look into your bank stock. After I'll show you all this. So what they do is they rotate out to a cheaper valuation. So you can see from here, as they rotate out, keep an eye on finance. All right. So you can see from finance here, started to move up, and where the market actually have a major fall, that's where the rotation rotates out. So here, they move up to here. See that? The finance rotate, and of course, KLCI is the one. This is up from the day of the major sell-off. Just want to show you the differentiation in here, and you appreciate property and sector remain the same. They don't know, but technology was the one people really got out it. But of course, if we come back to October, November, December, the market will converge back to the mean, which means technology will move up, finance will come back down. You understand? Right? Technology will go up because it's like being pulled. It's going to come back in here again. So right now you can see finance leading ahead, a little bit more room to go, I believe so. Utility and consumer all pretty much the same, but technology is the one that pull up. But it is all caused by the rotational of the pricey of the technology stocks and the cheaper, because finance stocks, a lot of them are below 12 times to 13 times, whereas the technology stocks, they're talking about 35 times to 40 times stocks in here. Okay. So we're talking about a little bit of the valuation, then you understand here. Now the US stock is one of the explanation for the major driver for our Malaysian market. Now we can see, right, after the big sell-off just now, this is the global sell-off. Okay, the global sell-off here. Let me just delete this one. Let me see if we can delete now. Yeah, delete. Okay. So this is where the major sell-off you see here, right? So a lot of our Malaysian stocks, after we go up, they recover a few days, they come back down, but there was a realization of the rotation. This is where the rotation happens. So the rotational here, the market picks up, and this is XLF. Now XLF is a US finance ETF. Okay? US finance. Now I'm going to show you what is the composite. As a matter of fact, SmartRobie has already have XLF. You type it in there, XLF, you can see those charts that we have. We are so-called doing a sneak preview for our US ETF. We have something like around 200 to 300 ETF on SmartRobie US. So if we use that, it's pretty good. Later I'll show you some. So we already seen the market started to pick up in here. So XLF, if I get it right, later I'll show you on the next slide, right? It's powered by Berkshire Hathaway B share. Now Berkshire Hathaway B shares has a lot of technology. So he has sold some Apple share, he has sold some oil and gas, right? So a lot of those are realized into Berkshire Hathaway profit. Now many people don't realize, because of Berkshire Hathaway being the biggest driver of the XLF, which is a finance sector, which in turn drive the entire US finance sector doing well, which in turn drive our local market. Of course, the coincidence behind it is those companies who did much better, helping to improve their margin and their profitability and their earnings over the last 2 quarters, like Maybank, Public Bank, which were coming from a very low base, a very low base. Now they're up, so it tends to follow up. So you see that. So of course, this is the big brother. You can see, as you can see, XLF continue to drive up. And for those who don't know, VSA 360 also have the XLF chart in there. Or you can check it out from the finance on the trading view. So this was the US power up in here. So you can see Berkshire Hathaway A share started to move up. And this is the most important part, which I'll share with you, is the earnings. So if you have the let me just switch over to the finance side. It's important that you, those of you who wanted to have a bit more leeway, a bit more so-called visibility, you can pair this VSA 360 then in here. So here is where you see Berkshire. Let me just show you Berkshire Hathaway B shares, because I was looking at some other shares here. Okay, so you can see Berkshire Hathaway B shares has great improvement. Now this line that you see, the blue line, that is the financial earnings for the full year. Okay, the blue line are the quarterly, and of course when the market goes up every quarter, like you see from here, this one the market goes up, this one has a pullback, follow a pullback, right? This one goes up, right? Then you can see, and as I said before, it was coming up from a very, very low base, which is minus $10 in 2020, lost money. Then this year make $44, a 500% improvement. So the stock go up lah. And you can see from the December, it went up, this has a drop $17, $5, but it went back to $14. So they were pretty interested to know in the coming quarter with the sale of the Apple and also some of the oil and gas sector which Berkshire Hathaway has sold, and that's what it makes the market go higher. So this is the finance sector. All right. So that's what's really driving this market in here. Use that. Now, in the SmartRobie, as I said before, you can type VOO. So VOO, you'll see Berkshire Hathaway have the highest top 10% share, which is the 12.95. Then you have the JPM, which is the JP Morgan. Then you have V. V is Visa lah. Basically Visa. Then you have the MasterCard, BAC. Okay, BAC stands for Bank of America. So if you look into these couple of shares, JPM, JP Morgan, so we want to see similarly too. Okay, so here again, you can see same kind of pictures that we have, right? Market started to move up. The major August sell-off was here, which is the 5th of August. The market pulled back a bit, but since has gone, it doesn't do gone parabolic like Berkshire Hathaway. Part of Berkshire Hathaway because it sold the Apple share and also some of the oil and gas. So here you can see coming from a low base again for the financial year 2022, lost money. Okay, just move this up a bit, you'll see. Loss was not really lost money $12. Okay, it went from 15 to 12, then now from $12 go to 16, which is a big improvement. That's why we see it. So on the quarterly, you can see a visibility. There was a quarter movement, $4.45 to $6. So this is continuing to go up. Now the question still remain for the coming September, right? September, I mean October. Will we see a modest uptick in here? But usually if the market hit high, right, here, right? Usually what we see in September, it will drop slightly. Once it drops slightly, the market will turn back down. So right now we can see finance has a little bit more room to go. Okay, because we also have shown you just now, seasonality, September month, right, is the most negative. Reason is because the June earnings that comes out are positive. So that drives, right, like it's like running, momentum of the thing run over June, July, August, because for June I normally release in July. So overrun until September. So September month, you expect the market to come back and correct this. Okay. So this is on the weekly side of it in here. Of course, you can also look at the BAC, MAGS, and use the SmartRobie. You'll pick up top 5. I just want to cover. So what are the favorable sector in here? Since tonight we are covering the finance sector, let's take a look at some of these, okay, on our VSA 360. So we'll go over to our screener and we will go to the KLSE sector and we want to look at finance, okay? So we'll look at the finance sector. So make sure you get hold of the VSA 360 that you have, right? And submit this first. Okay, you get all the banks are here. And we want to make sure we pick the minus 0.5 and minus 5. And then we left out with this. So we switch over to the turnover. Now, all these are the major banks. We want to look at those that are relatively cheaper. And we are looking for banks. We want to don't talk about insurance. Okay, so the banks, we type B banking here. And that's how you get up. So remember just now, one of the analysts was talking about which bank? Bank Islam, right? And also, what bank? M-Bank. Okay, so M-Bank is not in the list here, right? We don't mind, we'll look at it. So let's look at BIMB. BIMB Finance is Red Pentagon. Okay, so let's switch back to the finance. Bank Islam. I know Bank Islam is not Sharia compliant, so I know you all cannot buy it. Okay, but let's take a look at it. BIMB. So if you look from the bank side, we have, it was going up, then you have the big sell-off, which is the 5% drop, and we still have the bank dropping 2%. So we still need to wait. Okay, so you need to wait. And of course, we want to switch over to whether it is never mind. Whether let's switch back to this one is better. We go over to this. So you switch to here. Okay, we overlay with the earnings, and then we just switch to BIMB. Okay, so we have BIMB. Let's open up this a bit. So you can see BIMB, having said that, it also come from a lower base. This was 22 cents, now it's 24 cents, up 7%. But you notice the market, the earnings has stayed at 5 cents and 6 cents. So next one will be come out in September. So September, usually you wait until October, about 1 month minimum. October come out. So that's what the market is pulling back in here. I don't think this BIMB is going to go a bit higher. So if you look back from here, the market already start to correct already. So that's why you need to wait for the green pentagon if the result for the quarterly for BIMB is up. So I can tell you very quickly, this is worthwhile to buy or not. Now this technique itself is useful if you have the VAC 360, all this, and you can pair together and see how the market, so to ensure that you don't buy off some of those shares. And some of this concept I'll talk more on the CPE courses, which I'll talk about. Remember CPE on the August 8 or October 8. So make sure you join the a very affordable 98 ringgit course that I'll be doing then. All right. So we have time. We'll look at some audience. Let's look at AAMB. I'll assume this will be our audience. Audience stock pick here. Okay. So MBank. So you look at MBank and we'll switch to a weekly chart. Now MBank, right, it's a much different picture. Last year it went up to 16 cents, it dropped 14 to 15. So month of September usually is higher. So if the September month is higher, then it's likely to stay from, this is coming from 53 cents to 54 cents, just up 3 cents more. But you can see the quarterly earnings are important. So we switch back to daily chart. And you can see that is why MBank is holding up, which means they do expect the quarterly earnings to be higher. Right. You can see BIMB Bank expectation will come down because the result not so good. This one, they expect the result to be higher because the base is slightly lower at 15 cents. So the next quarter is going to go higher, and that's why it's not dropping. And that's why we don't see a red pentagon that we see in far. That is how I perceive with the market. Okay, that's Maybank. You can see Maybank is really strong. You can see every quarterly going up. Okay, Public Bank has gone up a bit. It came out from a slightly lower base, which is around the 8 cent now, moving up. So every chart that you see, which I share with the members, you interlay together. Oh, BIMB Bank is Sharia. Okay, good, Nora. Thank you. I didn't see that. All right. So, but I said before, like just now, the expectation BIMB Bank still need to wait for the green pentagon. All right, CIMB Bank, again, why is it going higher? You notice the earnings every month is improving. You can see, now every quarter is improving here. Year to year is also improved better over CIMB. Hong Leong Bank, 14% compared to last year. But you can see the quarterly earnings is just tapering off. So Hong Leong Bank, not ngam. This is the one you don't want to. MBank is okay. BIMB Bank have to wait for the green pentagon. Okay, so in short, I want to cover is that not all the banks are within the profit expectation which I shared with you. Some banks with better margins, the better earnings one, are the leader of the banking bank, which is the CIMB, the Maybank, and the Public Bank. The other mid-cap stock are not in par. Okay, MBank may in there, BIMB we have to keep in mind. So finance sector again will also correct. Having said that, right, maybe just the 3 banks will sustain in here as we see the September month will likely to come down for the finance sectors. But those companies would likely to hold on is because of the better margins that we saw either for Maybank, the Public Bank, and as well as the CIMB Bank, Hong Leong Bank. But Hong Leong Bank I do see likely to come down in here. So let's also look at the other sectors, right? Not just on the banking stock. You could see our latest. So let me just bring into our trade VSA for those who our members. They want to look up into their Pentagon Guider. It's already here. So we just put in a minus 0.5 and 5, right? And we turn on to the turnover. So we can see Westland Construction continue to be here, right? Just nice uptrend, 9%. PTT Synergy, this is a property, but volume is very low. Okay, Westland is interesting, but remember this 9% up move is bit a lot. Fiamma also very small volume, so don't. Dyna Front, I think this one is $1 stock, a software company, right? Again, we have to be careful. It's only 1,000 share, very illiquid. Having said that, so here does look like Westland, a construction company in here, but you have to wait for a pullback first lah. Okay, so nothing much. Let's look on the 3rd of submit this. We got minus 0.5 and minus 5 here. All right, so this is up to 4th of September. So here we want to look at Delium. We look at Zealand. Okay, Delium looks pretty good. Okay, being an energy sector, but keep in mind, energy sectors, if you note back, let's go back to CL, right? The crude oil futures are coming out. VLB already moved. Okay, yeah, you see, crude oil is falling some more, so we have to be careful. Delium, we have to be careful. This one going up unless it's something else. Zealand, no good. Oriental 200 share tak cantik. I say volume very low. So those are very low volume one. Kita tak nak. Taffy, Mountain, all this. You buy there, you can stuck one. All rich, you can see. All stuck one 3 cent. C-Hub, they're all stuck one. This one also stuck one, you can see. So don't, okay. Zealand, too small. Must be above 19 cent. Nothing much. So make sure you log into VSA 360 and check it out. So a couple of stocks that I still like, which I talked about last week. Nora is like is illiquid. Is the stocks that we have, but these I haven't turned green Pentagon yet. So let me just make it smaller for you, and then we will look into this stocks. Okay, switch back to my here, leave. So first one is MYEG. Now MYEG have to wait for the green Pentagon. It's holding up at the 200-day moving average. So let's see. Wait for the market to turn back up to the positive. To the positive market stages here. Must move up to the green level here. All right, we want to wait for that. So next one we have is IJM, which for a construction company, the theme still red Pentagon still going down, so avoid it. Wait, must wait. Next one is Kejaya, also need to wait. Belum lagi. Because why I said before, going forward, a lot of the major projects like IGM, Gamuda, they will be for it. You can also use Gamuda if you want to. It's just that these two are more profit driven, more cheaper. Like I said, let's look at Gamuda. Okay, you can see Gamuda is about $7, right? IJM is cheaper a bit lah. Okay, IJM is only $9. And earlier on I talked about the rotational, right? We look at the finance, so you can see from here is 17 times. Okay, right? So let's look at 17 times. Gamuda is how many times? 23 times. So Gamuda is expensive. So IJM is cheaper. Kejaya. Okay, Kejaya, looking at the, you can also find this in the, Kejaya is 16 times, okay, and so IJM is the cheapest. So if you look at the banks, Maybank side, okay, so Maybank, you can look at the PE, right, it's 13 times, which is the same as the FPM, so they are relatively. Let's look at Public Bank. Okay, you can see Public Bank, you look at the finance, is 13 times or so. Very similar in here. Okay, and that gives you the confidence if you want to hold a longer period. But remember the bank side coming up. So smart money, as I said before, they also paired all the way together with the earnings. This is what I've learned, right? A lot of the operators, which is generally are the smart money, they know ahead what the finances is likely to be. So you want to use volume spread analysis, use today what I've learned from a fundamental approach analysis, and make a date with me on the October 8th. For our members, those of you VSA 360 for small fee of 98 ringgit, support me, come to our October CPE 10-point course. some of the topics will be refresher. If not, you can also pick up new things in here. So going forward, the month of, we still have the October, September month already gone already lah. It looks like we got October, November, December, and they'll be coming up from a very low base. And above here is the US president election, which I want to remind everybody who is listening to watch out for this date in here. So in summary, Bursa still have room to go higher, but we still have correction to come. September month. Now what's likely to see is that we will see the correction in finance in September month. Then we have the technology will turn back up, the construction will turn back up, finance will move slightly, and then overall the CI will also move higher. So stick to the Pentagon Guider for your timing signal when you want to be in, but be patient everybody, be patient. Alright? Trade well, live well, and survive for another day and in here. And of course, those of you who wish to renew your VSA 360 membership, I thank you for your generous support in here. And for those of you who wanted to join us for this great membership, we welcome you too. And our series 4 of our virtual trading will commence on the 7th of March 2024 until September. Okay, and our CP cost very affordable, 98 ringgit for a dinner of 2 person. You already can learn a lot. It will be on the 8th of October. We do it through Zoom, 8:45 to 4 p.m. and you will get 10 points CPE, which I will also need it very, very soon. All right. So use the QR code up here or go to tradevsa.com at workshop. So that's all I have for tonight. I hope you all have some good reason to hold on to your finance shares, or those of you who are late might want to consider some of the facts or re-watch this video to re-strategize it in here. But remember, in the month of September, don't be overly bullish for the finance stock. We will see a bit of a correction in here. Some stock may have a little bit more room to go. So with that, I thank you all of you who joined us tonight. Don't forget to join our Telegram chat room in here. That's all we have. Good night.